When I was broke, I had rich habits. When I was broke, I had rich habits.
Hey.
Welcome back to the Master Keys podcast.
Thanks for tuning in.
Episode 16.
Episode 16. I'm Chandler Haliburton.
I'm Neal and Andreino.
All right, welcome to the show. What's going on, Neal?
Not too much. Just, usual stuff. Trying to do some deals. Unfortunately, no exciting closings for me this week.
No, but how's the takeover going? There's always that transition period.
Very complicated for multiple reasons. I think the first one being we closed later than the first of the month due to the issues that came up. But rent was still my responsibility to collect on the first.
That's the worst. Little tip, if you're closing a place, especially large or more units, try to close it just after the first of the month. Because if you do, it's the current owner's obligation to collect those rents due on the first and then transfer them to you on closing. So even if someone is late or delinquent or what have you, on the statement of adjustments on the closing, the existing seller is responsible for all of those rents. And if it's on the third or fourth day, it'll just be prorated for 27 days a month or what have you. But that is way better than, say, if you close on like the 26th of a month and then 5 days later you're trying to make arrangements with a bunch of tenants to collect. In this case, they made you collect the rents for some reason, probably because of the delayed closing and stuff.
It was a bit of I'm not dealing with collecting rents at this point. I've already told the tenants that the buildings were closing. You delayed the closing due to issues that were kind of out of my control, but we delayed the closing.
Yep.
So he's like, look, you've got to deal with getting the rents. I'm not picking them up. You deal with them. So now we're trying to go back and get those rents, also where it's late into the month. It can be tough sometimes. The tenants might not necessarily have the cash sitting around, and there's another payment coming up in 5 days. So
that's the worst. Yeah,
and the leases are a bit of a mess. Like the person who owned them before, they're good tenants, but the leases some of them have been there 5+ years. They don't have leases. Security deposits didn't all get transferred. So we're going through that fund right now.
We're here end of the month, and you're talking about collecting rents for the first of the month still?
Oh, yeah.
That we're outstanding? Because then, there's another month coming up.
They owe double rent, which is I'm expecting to see some bounces on the withdrawals.
Yeah.
So anyways, we're trying to get it sorted out as quickly as possible, but it's tough, even with contact info and trying to introduce all the tenants, and the tenants are all confused.
Yeah. How often do you find that closings get delayed on stuff like this?
Surprisingly more often than people think.
I find they always get delayed.
I would say I was gonna say always, honestly. Like it just seems like on a commercial deal, it's never as simple as just doing some stuff. First of all, lawyers have more work to do.
Yeah.
On both ends, they're trying to figure out their adjustment sheets and all this crap. Yep. So there's always a screw up. Like the seller's lawyer will send over an adjustment sheet, and the buyer's lawyer will find a mix up. Well, they can't just be like, all right, just add $300 on.
That rent roll doesn't reflect what we've got in the leases, which doesn't reflect the rent roll that you sent over earlier. That's been increased. We need something signed about that, and so on and so forth.
Broker conditions on the money. There's always a little asterisk of like, oh, we got it, but the insurance doesn't show the right payee address by a digit on the postal code because this bank just moved their office in Toronto 3 floors higher, and you're like,
yeah.
Does it really even friggin' matter? It's got their name on there. It's got everything else in there. But there's so many random little things like that I find always impact it. There's also the aspect of a lot of people in this game are refinancing to buy another one. And I've seen that where they make the dates the same, or they're using the same bank for the refi and the buy. So the bank's trying to process through the refi and the buy, and the whole works in that week. And it's just they also hire they elect their own lawyer. So you're dealing with the bank's lawyer, your lawyer, and the seller's lawyer, and they're all just pointing fingers at each other, and you're like, what do I do?
It's funny. That's kind of what I'm going through right now because I'm doing the refis that I think I mentioned in a previous episode to purchase. Well, for part of the reason is purchasing this side property, but then also to gear up for the development. But it's funny. Igor, he was on our show. You guys have probably, hopefully you've watched that one. It's a great episode with Igor, who's a mortgage broker. But then he connects me with a bank, and God love him that this bank, it doesn't matter when I say. Sometimes I don't even send them the conditions. They're like, we're going to need a 2-week extension. So I didn't even tell you what day it was due. Whatever it is, we're going to need a 2-week extension. I could be it's 6 months from now. Better make it 6 months and 2 weeks. Yeah. If it's 4 weeks from now, we're going to need 6 weeks. It always seems to get delayed. So already, I'm supposed to close on that property November 14th.
Yeah.
And like a week ago, so October 18th, they were like, we're going to need a little longer than that closing. I'm like, how do you know already? You haven't even tried yet. So I've got to have this preemptive conversation with the seller, like, hey, we're all going to be good here. But and it's kind of embarrassing, but also I knew it was a tight turnaround. And
I think most sellers are fairly understanding of it because they recognize that, like with these properties, it's not like a house. Like a house, you might be able to flip it around and find someone that's got cash. They'll just buy the thing and close in 2 weeks. Like that's totally possible. But you're not going to find someone that's just game to, with no knowledge of anything, turn around and close on 20 units for $2 million. Like that's just not. They need to get financing in place. There's all these other issues with enviros and inspections and this and that. So a lot of times they're kind of like, all right, if I go back to market, I'm probably not going to get my money for an extra 3 months or 4 months. And there's potential of a bunch of other issues and a ton of other risks. So I really want to back out of this deal, because I'm a little cranky that we'd extend by a few weeks. And they've probably been on the other end where they've been buying and they've had to extend.
That's exactly it. I mean, anyone who's selling a multi-unit, that means they bought a multi-unit at some point, and they get the closing delays that come up. And it gets across the finish line. I mean, I know if the financing is in place, but the funds are coming simultaneous or as part of a refinance on some other stuff. So there's a lot of moving parts. I'll likely get it done, unfortunately, the end of the month, which is exactly what we just talked about. And so the bank first came back like, we'll get it done for November 30th. And I'm like, that's the worst possible day. I'd rather you said...
They're probably closing like 5 houses that day too.
Yeah, well, I would have said I would rather it be December 5th than November 30th, but that's not a good look. So like, can you please just get it November 25th or something like that, so that I have a few days to go meet the tenants, and none of them are going to do e-transfer. I guarantee it. It's all going to be cash or checks, and it's going to be a whole thing of like, okay, so you got to do an e-transfer. You don't have an account, and like it's going to be a hot mess. But one thing that I was going to update people on, because I don't know what else has been going on this week. Actually,
I was going to say one more. I was going to say one more thing on this. It's a weird one. I don't know if anyone else has heard of this or you have. Engineering report on the building. That's what I said.
Who's the lender's requiring that, or the
so
insurer?
This is a new bank out of Ontario that hasn't been lending here in Nova Scotia yet. They're just getting here, and they're fairly casual about a lot of things. They're the one that's even potentially willing to take on my enviro work and include it into the construction financing. Mm-hmm. But they want an engineering report of the building, and I was like, what?
Interesting. So I've had an engineer report done before. It was cheaper than a phase one at the time.
It was $500.
Oh, that's it? I mean, that's a really good deal. You can't even get a home inspection done for $500 now.
Yeah. Well, and I mean, it was kind of like he was literally there for 15 minutes.
Yeah.
In each building. He walked in and he went into one unit on each floor, walked around the outside, walked around the basement, and was like, all right, I'll get your report tomorrow.
Yeah, typically what they're looking for there is the life expectancy of the property is what they say, because they're trying to make sure that the amortization on the loan that they're giving isn't more than the economic life remaining in the property. I know that sounds crazy because obviously these properties last for a very, very long time. But materials and construction are meant to kind of have an automatic engineering life. And it's been a while since I looked into it. And so this is a terrible kind of example, but it was something like, the economic life of a wood frame structure was supposed to be 60 years, and for a concrete structure was supposed to be 90 years or something like that.
And then when you factor in that rent cap's 2%, so you can't do any maintenance, that might go down.
That could
impact.
I don't know how much. Are we going into it?
No.
Okay, we're not going to touch on that. Okay. Because we like to cover what's going on in the news right now following our emergency episode, depending on when this one comes out.
Thanks for everyone listening to that and giving us some feedback, by the way.
Yeah.
We were a little heated.
Yeah, I mean...
Chandler in specific.
I chose violence that day. I was hot. But it was a hot topic, and it got some traction online, and we're going to revisit it. The dust is still settling on that, and But that's for another story. That's not what we're talking about today. But I did have one interesting little anecdote of what I've been up to this week. So in order to complete that purchase that I'm doing, and in order to load up for the development play that I'm doing, I've been getting some appraisals and calculating net worth and looking to free up some liquid cash. I've been burring, man. And I thought it would be interesting for people to hear. I don't know. This feels a little bit weird to be talking about, but I think this is the transparency that people will appreciate.
Tell us about your money, Chandler.
Tell us about the monies in the buildings. So what I effectively did is I had two properties, one that I've had for a long time that I knew there was a good chunk of equity in, and then the property that I took over about a year and a half ago and did a substantial renovation to. So the first property, again, I've had it for a long time, so it's been refinanced before in the past. This is the initial one. We put it up on the screen one day. I bought it way back in the day. So its appraisal now came in at $1.98 million. And I knew that I owed $1.2 million, give or take, on it. This was one of the properties that the appraiser said, hey, if you were more close to market rents, you'd actually probably be about 2.3, something like that. But either way, it came in at 1.98. I owed just over 1.2. 75% loan to value, just call it rough numbers, 1.5. So in that property, I was able to clear up $275K of liquid capital.
Boom.
And then on the other project, which was a 15 unit that I think I closed, it'll be 2 years in May. So I closed it in May 2020, I guess, and significantly renovated that property, probably to the tune of like $500,000. I owed 9.25, I think 926. It appraised out at 2.28. So for really rough numbers, the refinance I could do was 75%. Yeah, 1.7 million. And then based on what I owed, I was able to clear almost 800,000 on that property, like 770.
Nice work.
So together, obviously, those are just over $1 million. And with that, I'll be able to purchase this next property, which I need. And this is interesting. So the new property being quite downtrodden. I know. This is interesting, right? So the new property needs a lot of work. And I got an appraisal on it, and the appraisal supported the value of $960,000, and the bank was fine with the appraisal. However, as we talked about in the cap rate episode, just because the appraisal's there and just because you can massage some things, the bank still may not support the borrowing. And in this case, the cash flow of the building is quite low, and I mean, they read the news too, so they know that my ability to increase the revenue on that building has just been hammered. So rather than the traditional 75% loan to value, they would only extend me 65% loan to value. So rather than 25% down payment, I have to come up with a 35% down payment, which works out to be about $340 because I'm paying $960 for the building. So whatever approximately that is. But long and short is cleared around $1 million through these two properties, and then I have to put down $340 on the property. I already have like a $40,000 deposit in, so I actually need to put down $300,000. So I will have an additional liquid capital of $700,000, which could then be used for another project. But more likely, the real point of this was
permits,
to pay for permits and the like to build my large project, which is a 60-unit plus 3 commercial new construction project. So this is just kind of a explanation of how this stuff works. We've been talking about this at length, and I thought, well, as soon as I have an actual good practical example, I'll show everyone, and so there you are.
This is the big burr.
Yeah, this is the same model of raising equity and then pulling that equity out by way of an appraisal and refinance, and then using that equity to do something else and to expand.
So why no CMHC? And I asked this because CMHC allows you to go to 85% on these buildings.
Yeah.
I have a reason in my head already, but I'm curious to see what you say.
So obviously the more liquidity that I pull out of the properties, that's fantastic. That said, I like having some equity in the property. I like staying away from CMHC because it helps my borrowing and other aspects to have that equity in there. I don't need that liquid cash necessarily right now. And then there's just the repayment. I mean, it's great to push that cap rate lower and lower and lower and get the value up higher and higher and higher, but you do have to pay those loans back. And I like my cash flow situation better at a 75% loan to value rather than 85% loan to value. Also, I'm trying to turn this around. We just talked about how much of a process this is.
Yeah.
And to get the money in time to close, you throw CMHC in there, I might as well add, a couple months extra, right?
Yeah.
So these are my reasons. What are yours?
My thought, honestly, for you is that your rents aren't where they need to be to get the maximum dollar out. My thing is I'll CMHC something once I get the rents to the absolute top, and I feel like that's where it's going to be for a long period of time.
Yeah.
And I have no intention to move the building over. Then I'm going to take home 85 again, where I'm starting, and I'm focused on the rapid growth. Then I'll take the 85. The payment doesn't change too much, just because they do a longer AM.
Yep.
And the rates
That's
typically
true.
a little lower.
Yep.
But yeah, that's the only thing. So like for you, I wouldn't even recommend doing them right now, where you know that there's still a lot of room to grow on these buildings.
Yeah.
That's where I'd be leery of it. But anyways, no, that's good that you had that much equity and stuff. I remember when you bought, I think was it the 15. You said you did a lot of the rent out of pocket.
Yeah, that's another thing we're going to say for an episode where we talk about things that we do differently.
Yeah.
So, I floated those renovations. So effectively, a lot of this equity that I'm getting back is just the equity that I put into that property.
Exactly.
And, it certainly went over budget.
Always.
It always does, but it's a phenomenal product now that it's all complete, and I got that equity back. So this one people say, like, I got into the property, and, like, I know I'm not a dime out of pocket. It's like, yeah, sort of. I mean, I guess I got all my equity back, but it's not so simple as I didn't exactly buy it zero down or anything like that. I put a lot of money into it, and here was an opportunity now, a year and a half later, to get that equity out and to go on to the next adventure.
You had to pay to play. Technically you have no money in there now, but like you had to have it there at some point to get through that year or two that it took to get the work done, plus get the refi and move forward.
Yeah. So that's what's going on with me.
Very nice, very exciting. I don't have anything like that going on. I have the other ones I have under contract that will hopefully be closing soon.
Yeah.
So I'm just working on those. So today, I don't think we have one single set topic. We're trying to address questions. I think some common questions that we've received. We tend to get a lot of texts from people that know us, and they kind of suggest some ideas, and then a few are just comments that were on posts. So we're going to try and delve into some of that, and just kind of how we handle it, how we work with it, and what we think is good, and it's kind of allowed us to move to where we are today.
Yeah, and this week a lot of questions were about the rent control situation. We're not going to delve into that, but one of them that sort of applies, generally speaking, when you sort of think about what it means to have a challenge and something come across your desk that is not what you wanted to happen. I had multiple people say, I don't know if I want to be a landlord anymore, or
Same.
is it even worth it? Because one, it's harder and harder and harder to make a living and do all these things to these properties. And two, you just get dragged, right? Like, people
Absolutely.
say bad things about you. It just doesn't seem appealing. So folks that either have been doing it for a while or looking to start it have asked me point blank, should I even bother doing this? Does this change, our plans to invest? Why do you even do this? So I'm sure you were getting that question as well. That's what we were talking about it. What
I think it's a response to the emergency podcast. The emergency podcast, I got a few people that called me and like, I don't know if I want to be a landlord anymore. And I was like, yeah, we probably went a little far and a little aggressive on the air, but realistically, it's all true stuff that you do face, especially on the smaller scale, and it can make it very tough. So my response to them is, at the end of the day, I think this is stuff that was always in play, not necessarily formalized like rent control, but the idea of not necessarily being loved for what you do. Like, it's not it's not the kind of business where everyone's like, oh my God, thank you so much for building my house or anything like that.
Yeah, it can be a little bit thankless at times and
fairly
whatever.
thankless on that front. But at the end of the, and it's also was never passive. And I think people, again, this kind of stuff makes it bring it more to light that it's not a passive thing, because a lot of people who are trying to get into it kind of have this notion, I find, that it's like buy it, rent it, like peace out, deuces, I'm just going to collect checks. But this kind of hones into light, like, these are the kind of problems that you face. And this one's really big because everyone's facing this problem. So we're all having to share with it. But in every property you buy, you're going to have problems. There's always going to be little problems that you deal with specifically. And so I don't think it really changes it when I tell them, like, look, if you were interested in getting into this, I think it's still important to get into it. But then you need to factor in these these items when you're looking at your investments and what you're having to do. And so understanding that you might have to put down 35 instead of 25%, and kind of working with maybe modifying your model. But if you're unable to do that, you probably shouldn't be in the business to begin with, because it's not a straight standard thing. You can't expect to just come in and follow these systems. It's a business. You need to be able to operate under these ever-changing conditions and work with that. So if this is, you know what I mean? If this little thing is causing kind of your concern of even doing it, then it's something to reconsider, I think, in general.
Yeah, I think it also, and how this kind of shifts to a larger conversation, is this mentality that you need to create of how you respond to obstacles. And I always try to say, okay, you've got 5 minutes to feel bad about it. Yeah. Something doesn't work, you don't get the offer accepted, a lousy thing happens that doesn't go your way. You've got 5 minutes to be angry and to complain and whatever, feel like nothing's fair, blah, blah, then you got to get over it. And, I guess our hour-long podcast was slightly more than 5 minutes, but at some point you have to get over it and then plan. Right? You can be angry for a little while, but being angry, being disappointed is not going to do anything. It's not going to change anything. So where are the opportunities within the situation, both practical opportunities like, all right, maybe there's going to be more sellers, which is what I alluded to. Okay, maybe this is going to open up some possibilities to buy.
Yeah.
But then just opportunities to grow and be better. Like I said, I'm going to sharpen my pencil on a lot of things. I'm going to get a bit more diligent in running this as a business. Money in, money out, right? If I'm going to be constrained to a certain set of parameters, I'm going to operate the best I can within those parameters. So then you take this negative situation, you embrace it, you embrace the struggle. There's all these expressions about, love the failure, celebrate the failure, and try to realize that it's an opportunity to get better, as cliche as that sounds.
Yeah, you'll learn from these things. Like these changes and any issues and obstacles that you face are actually gonna help you kind of grow the business and be a lot more astute as time goes on. That's where I came into it young and cocky and kind of thinking I knew it all. And some of these old guys have like these principles, like I will not do anything unless this happens. Yeah. And now I'm starting to see where those principles come from as time goes on, and I actually start to respect them because I'm like, used to kind of be a little bit loose, like just shooting at everything and going for everything and going kind of crazy with it. Yeah. I'm realizing you do really need to follow your systems. And the other thing is there's always another deal and stuff like that. You kind of need to keep those ideas in your head and then kind of work through it. The other thing is if some of these rules that came out directly just destroyed your model, there's two options. Either you look in a different location that allows your model to operate, or you change your model altogether. Again, that's just business. Very, very common. Yeah. And I can't say that I'm just going to be like, stomach this and move on. Like I've said a few times previously, and I'm saying it again, I am now looking at different locations outside of Halifax to make my investments.
Which is a sad situation, but it is the reality, and this is what business people do, and this is why we need to always be careful of, how we encourage or discourage business in the areas we live.
Exactly.
But I've mentioned this before that I love to read about this sort of stuff, and when this was all going on and when I had a second to reflect on it, I turned to one of these books that I really enjoyed. It's called The Obstacle is the Way, which I think comes from some, old philosophy that's like the obstacle is the path. And it's sort of, if by going through these things is how you actually get better at the end result that you wanted to achieve at the end. And a really good example, and I know you like gym analogies, you don't go to the gym to lift the same weights that you lifted the day before. Yeah. Right? You intentionally lift heavier weights. And all those muscle tears, all those fibers like ripping and healing is what actually makes you stronger and better in the end. So by going through what seems like an obstacle or a challenge, you can come out the other side as better. But it is a change of mindset to say, okay, how do I view this as an opportunity rather than a kick in the gut? Because it feels like a kick in the gut sometimes.
Yeah, 100%. I think also, like, when you're looking at outside the obstacles, you're looking at like people not like kind of being a little thankless. You got to do it for yourself. Like you got. There's got to be a part of it that you just do, and you're enjoying it for yourself. Like I was saying right before we turned the mics on, like it felt good. Like when I got my first like decent sized property, like to pull up and that's mine. Like I was like, you know what, I'm really proud of this. It's exciting. It kind of gave me a good feeling, and it kind of gave me some motivation to push forward and keep doing what I'm doing. So I think that's really important. Not necessarily looking for like general acceptance or general excitement for what you're doing, because I don't think you will find that very commonly. Even if you're keeping the rents low and all that, very infrequently will you find someone that's gonna be like, I'm super pumped that you bought that building and
and you know what, that's everyone's got their own thing. They've got their own thing going on, right? So you can't live for the validation of other people regardless of what it is. And if we go back to our early episodes when we talked about why do we even do this, I know you and I both like the idea of creating spaces and improving neighborhoods, and all of my properties are pretty much within walking distance from my own house because I'm invested in my neighborhood and I genuinely like doing that. So I think there's all kinds of reasons to persevere in general, but specific to this question about being a landlord in this time, I still feel that the equity growth is still going to be there. It's not going to be what it was. Like, you will not be able to do what I outlined on these refinances, certainly not in the same amount of time. Like, what I was able to accomplish with that property in 18 months is now conservatively going to take 2.5 years.
Yeah.
Maybe more. Like, there could be even some more obstacles on top of that. But I can't even really remember where I was going there. I think there's still going to be equity growth there. I think there's going to be chances to get better. I think that I'm going to come out of it on the other side much improved. And I think I still am doing my part to make my neighborhood better, and I still have pride in these buildings, and I still enjoy the process. Crazy as it is, I don't know if I'm a glutton for punishment. I enjoy being a landlord, I just do,
I would say that you're one of the few that
do.
says that. I think there's a lot of guys that are in here
Like I do.
that are in this business that wouldn't necessarily say it. And I don't think it's just this business. I think there's a lot of businesses like that. Like, I'm going to be careful on who I call out, but I think a lot of people in university degrees that went through it for the simple fact of, like, basically I'm doing it for everybody else.
Yeah.
And I actually hate this business, or I'm just doing it because there's a good paycheck on the other end.
Yeah.
I think it's the same thing with landlord. I think there's a lot of people here that would say they really don't enjoy this. They're purely doing it because they understand the business and they see some upside.
Yeah, and it's all gravy when everything is going your way, and it all sounds like, a fun idea, and then you get these challenges, and there's no question that our industry now has become riskier.
Yeah.
And another question that we got, and this is a question that's come up a few times, and interestingly, it relates to the idea of refinances, is just how do you, I don't want to say muster the courage, because everyone's courageous in their own way, but how do you overcome your hesitancy surrounding the risk of investing, your life savings in your first rental property, or, quitting your day job to start a new business? I mean, you've started more businesses than I do, or I have. I'm sure people have asked you about, I can't believe, or said something to the effect of, I can't believe you did that. I wish I could do something like that.
Yeah.
Like, so we get this question all the time about how we're able to, quote unquote, take these risks. What do you tell people?
So, it depends. There's a couple things. I think the first one, if we're specifically talking about real estate, that one there I find is a lot easier to stomach. And the reason I say to everyone is you have an actual asset that backs what you're doing, and you can't make up the valuations on those. Yeah, an appraiser can squeeze the numbers up and down, but if the place is worth $1 million, they can't tell you it's worth $2 million.
Yeah.
They may be able to tell you it's worth 1.2, right? So there's only so much of that friggin' around. So when there's an asset backing it, my thing is, I'm like, look, the bank wouldn't be giving you the money if they didn't have confidence in what it is. They have an enormous team of people that analyze all this stuff, giant computer systems, hundreds of years of data. If they're saying that they're willing to extend you this amount of money for that property, they're not in the business to take over the property, and they're not in the business to lose.
No.
So there's a level of confidence that they have in the asset that you're owning, that you can do it. So I think that's a big one for me. Is there's a physical asset backing it that they're willing to bear, like, kind of go against. And again, it's a fairly simple standard thing. Like, people need housing, the systems are in place. You're not into a new world. So for that's kind of what I would tell them at the end of the day is there's an asset. You can look through all the historical data. Also, I'm big on not buying stuff that just breaks even, or like we go look at these properties that are on market today and it's like, I think this 2-bedroom is worth $1,800. It's rented at $2,200, and then they applied a 4% cap rate. So like they're at above market rents. The cap rate is at bare minimum, so it's just breaking even, if that. And so that concerns me. I'm like, whenever we go into these, I'm like, let's take this rent down $200. Take your interest rate from 2% to 4 or 5%. If your numbers still work, then I'm not super concerned, because I'm like, now you have some time, and by the time it gets to the point where potentially your rents are down because the unit's been beat up and you have to bring the rents down to get it filled, and rates have gone up, that might be, let's say, 5 years from now or 7 years. At that point, you will have built more equity in the property, and you're in a safer spot.
I mean, what you're really saying is, like, look before you leap, right? Like, you will feel more okay with the risk if you're prepared and have done your research on things.
You say just research, though, but it's a mindset, right? Because people will say, I did the research. I see 2 bedrooms renting for $2,200.
Right, yeah, that's true.
And it says it makes this much money. You did your research,
Err
but
on the side of caution,
let's err on the side of caution as well.
Yeah.
To double down on that. Like, expect that your property taxes are going to go up a bunch. Expect that your insurance is going to go up a bunch. Like, run all your numbers heavy. Run all your numbers heavy that are expenses, and run your incomes light, and then see how things pan out. And if that's still okay, then why? Well, then I'm like, not why not? Effectively, like I'm like, you know what? You
Yeah.
have the cash. The return's still better than that. We know you can beat all these numbers, but you're going into this worst case scenario and you're still not in bad shape. Bank thinks it's worth it. Appraiser thinks it's worth it. Everyone's on board, right?
Yeah, and the other thing too, I know we've talked about it at length, but exit strategy, exit strategy, exit strategy. If you already know there's a way to get out of that property, then that helps alleviate that too. I mean, probably the biggest quote unquote risk I ever took. I mean, when I bought the first true multi-unit, I was nervous because that was every dollar I had, but I knew I was leaving 20% equity in all my other properties. And so this thing when people are like, oh, you're doing these refinances. I hear people get in trouble with that and blah, blah. It's like, well, I'm refinancing up to 80% loan to value and you have 5% equity in your home in the suburbs.
Yeah.
So I'm less exposed than you are. And I knew that if things went sideways, I could live in one of these units. I could liquidate them all. I mean, I had 3 duplexes just for really easy numbers. Or 5 duplexes. Say for really easy numbers, they were worth $300,000 each. Well, that's $1.5 million. And even if I refinanced 80% of them, what's that? 1.2, right? Like, so I had $300,000 there. Like, worst comes to worst, I could sell them all off, have $300,000, and at least be like ready to start over. So I never felt that exposed on it. But then when I took all that equity and bought another property, I had to think, okay, well, what's my exit strategy on that property? Well, it's that I knew I got a really good deal and I could see the upside that if I had to turn and burn the property in short notice, I could. And so that fortunately worked out. I didn't have to come to that, but I knew there was an exit strategy there. And then I took the equity out of that and bought land, which at the time felt even riskier because there was no income coming in.
On that, yeah.
Right? So I had to know that my other business was at the point that I could float that for a long time. But again, I also got a really good deal that I knew my cost per door, which was like under $7,000 once I was done my development agreement, the land value would be like $25 a door. So again, I would say if I had to turn it and burn it, like if I put that on the market tomorrow at even $15 a door, it would be gone. It would be gone in 2 seconds. So you have to have this exit strategy, but there's still the mindset. Like you have to. Sometimes you can give people all the information. You can lead them to water. It doesn't mean they're going to drink.
Yeah. I think the other thing that a lot of people consider, again, talking real estate specific, is they're like, well, I have to re-leverage my personal home to go do this. But the thing, and everyone's under this mindset, especially if they're surrounded by people that are non-investors, they're like, you got to pay down, which is true. But I agree. Like re-leveraging your personal home to go buy a sports car, not a great idea.
Yeah, I know people that won't touch their personal home regardless of anything.
Very true, and I get that, and I respect that. But then for some people, it's a good way to get started, especially now because there's a lot of people who have their personal home and they have a bunch of equity. But you got to look at it like, okay, I'm pulling this money out, and look at what you're going to get as a return on it, and look at what you're paying for interest to float it in your house. But make sure that you're investing it. Don't just pull it out to throw it into a bank account, and don't just pull it out to go buy a bad purchase. Like, don't buy a depreciating asset or something that doesn't make you any income. That's how you got to stomach it. I can't honestly tell someone to go do that and then go buy a car. Like that just seems stupid. Yes, the interest rate's a little bit lower, but still, I would not put that much debt against my home, which also still leaves me available to go get more unsecured debt and to go make purchases like that. So it's like you got to look at it like, okay, I'm going to take this $80,000 out of my house, but I'm also going to be collecting an extra $4,000 a month in rent. Once I pay all my bills over there, there's still $1,200 that I can put back against my personal extra mortgage payment. So that's one way of looking at it. When looking at business debt, I think I can speak to that a little bit more. That one is substantially more intense.
I can only imagine, because there you don't have a capital-based asset that you could potentially sell at any moment's notice. Yeah,
exactly. Like your expectation to collect rent is about 98% of the time you're going to get your rent. As a business, like it could go any way. Prime example is COVID hit and there's a bazillion businesses that just got overnight shut down.
Yeah.
Right. And so you could be carrying all sorts of unsecured debt that you literally just signed on to do that. I think the key with that and getting to a place that you can do that, first of all, it really comes down to being good operator knowledge and all those items, but it's also tailoring yourself to be comfortable with that. Like, I don't think anyone starts by saying, okay, my first business, I got a $10 million line of credit,
right,
and we're going to go out and start this big, massive business. You don't do that for two reasons. First of all, you don't know what the hell you're doing, so you're going to screw up. Second 100%. Thing being, the stress will kill you. Like, you're trying to make these payments, and you don't have a guaranteed income. And that's why a lot of big businesses that do really well have these reoccurring payments, whether it's like a subscription of some sorts, right? Everyone wants to do subscription businesses now because it guarantees their ability to pay down the debt. and alleviate that stress.
Gym memberships. You see all these startup gym memberships, yoga studios, cycling.
Yeah.
That's what their model is based on. Because if you had to sell someone one bike ride every time, you're dead in the water.
Yeah.
You sell them a monthly,
If
and
you
your
have
money.
exactly like gym memberships, even car payments. That's why like car financing is great, because for them they're borrowing the money and they're relending it to you. Netflix, all these tech companies, gaming now. Like you don't buy video games, you can buy subscriptions to the video games. Every giant company is trying to convert their entire business model to subscriptions. Microsoft Office, you used to pay $300
Right.
for it.
Yeah,
Now
yeah.
it's $29.95. Like
Yep.
everything is subscription modeled, because it just makes more sense on financing debt and being able to then grow your business, because you can show this really consistent cash flow. But getting to where I think you can handle the risk of it is you have to tailor yourself. So you start small, right? Like, again, going back to all the funny things I've told you guys, like I sold paint, I did the lawn care, I did all these small things. In those businesses, I took little amounts of borrowing, took on little bits of risk, understanding what it takes to, okay, this is how incomes go, and this is how, like it's intermittent. And now with the contracting company that I have, we have very big operating lines of credit, and I need to understand, like, some months the money's not there to make it. So we're literally using the debt to pay the debt. But then other months we might get in the payment from 3 or 4 big jobs. We might get a couple $100,000 in a month, and then we can pay it down in those periods.
Yeah, and so sort of the crawl, walk, run, because obviously when
Yeah.
you start the small business, your exposure, your actual risk is smaller, and you just continue to learn and build up that tolerance to risk. The
Yeah.
other thing we talked about it in another episode is, we talked about two things, and they're kind of related. One is how oftentimes people who are new to the country and have less of this Western idea of, oh my gosh, I'm afraid I'm going to fall out of the middle class,
Yeah.
and they're risk averse, as opposed to people who maybe say, you know what, I don't have that much to lose, and have like this inherent adventurous outlook because they picked up and moved to another country.
Yeah.
You know, they are there to try anew.
They've already taken the biggest risk in life
totally.
of moving to a whole other part of the world where they don't know anyone necessarily. Like, just
Don't speak the
everything's new.
language.
Don't understand
you
the
know,
culture. Don't speak the
yeah.
language. Don't have the business connections. Don't understand all the practices.
Yeah.
So then to go do that, like, they're already the master of risk taking.
They've built the callus up that you sometimes need to take these risks.
Yeah.
So we talked a little bit about that and how you need to kind of overcome this fear that's maybe been instilled in you to stay in one spot. The other thing we talked a little bit about in an episode was this idea of the stick or the carrot, and sometimes how people are so motivated by fear that they stay where they are, as opposed to what you'd think, which is they'd be motivated by the carrot, the reward, to try something bigger. But the reality is most people aren't motivated by that, right? And this is why when people ask me about risk, I'll often say, like, well, listen, I don't know how that's going to turn out.
Yeah.
Right? If you take that risk and there's big upside, I know it could be amazing, it could be not amazing.
Yeah.
But I can tell you, if you do nothing, the real risk is that you're going to stay exactly where you are.
Always.
So how unhappy are you in this moment? Because, you know, being content is the enemy of being happy.
Yeah.
Right? Like if you are satisfied, or I don't know if content's the right word, but being satisfied or comfortable where you are is the enemy of being happy. So what's the risk of going for it? I don't know. Maybe you lose some money.
Yeah.
Maybe things don't go your way. And we in the Western world, the capitalist world, like that is embarrassing, and we put a lot of stock in that. But if you set that aside, you know, could you start anew if need be? And what would be the worst thing that could happen? I mean, it's different when you have kids. Like now I'm a little careful with my risks because I have children to take care of. But there was a point in time like, well, if it doesn't work out, I mean, what's the big deal? Like, I'll live in one of the units. Like, I can scrape by. But I was more afraid of the risk of being average. Like, I was more terrified of that. And that's what motivated me, not the whatever might come with being successful, but more like the fear of being average.
And that's my biggest, hands down, number one thing I say this to every single person I talk to is you got to do it for yourself. You need to be self-motivated. You can't be worrying about what everyone else does for both things. So for the actual motivation aspect, you got to be pushing for yourself. Like, you being worried about average is not because someone else told you that. That's your own internal fire that you want to be there for. Additionally, I think that's a big one. Is in today's North American culture, everything that they do is all over everything, and everyone's involved.
Yeah.
And everyone makes comments. You need to block out the noise.
Everyone's out there faking the funk, right? Like,
Yeah, you need to block the noise.
Yeah.
Everyone's faking the funk. Like it, and you know what? Sometimes just do the stuff without telling anyone. If you're nervous and that stuff does bother you, and I get it, it bothers all of us. There's no way around it. Chandler loves good comments. On a side note, but you need to be able to just do it. And sometimes if you can just do it maybe privately and never bring it up until it happens, that's not the worst thing. And that's what I used to do too. A lot of the small stuff that I did, nobody knows. A lot of people laugh like, you did that? And I was like, I was doing that the whole time we were friends, but
Yeah.
I didn't feel confident in it because I was afraid that it might fail. And so I still tried to make it happen. And for me, I tried to make it happen, but I didn't advertise that I was doing it because I didn't want the societal pressure on top of me that not only am I going to be angry at myself that I didn't make this work, then I have to take the ridicule from other people that this didn't work. Do you know what I mean?
Yeah, I mean, there's nothing Instagrammable about a failed business, right? And people don't want to do that, especially when other people are on there celebrating wins, whether real or fictitious, right? Like, so it's tricky. You have to detach from that, and you have to just motivate of like, okay, how bad do I not want to be where I am? And then you have to take that risk and maybe put it in a context of like, well, it wouldn't necessarily be that bad if it didn't work out. And I mean, the thing too with risk is it ends up paralyzing people, which is another sort of question that we get a lot. And it's also something I struggled with, just this idea of procrastination.
Yeah.
I mean, I know I struggle with procrastination, a lot of things that I do. And really, if you break it down, the reason people procrastinate is because we have evolved over time to avoid risk and to avoid discomfort. I mean, when we were out there in, I don't know, cave person times or the jungle or whatever, we did everything we could to survive and stay comfortable and safe. And that is the way our brain, even like the, endorphins or whatever it releases to our body, are different when we're comfortable versus when we are at risk.
Yeah.
So you have to untrick your brain and reprogram it to fear something else, be it fearing mediocrity, be it fearing, regret, be it fearing some of these things, as opposed to fearing what the world kind of instills in us, which is this fear of failure, this fear of trying and not being successful, this fear of falling short, whereas opposed to just staying where you are and staying safe in the cave, right?
I think it's a bit of a generational thing. I'm now that I think about it a little bit, I think a lot of the previous generation to us, a lot of them came from humble beginnings, and I think that's when things are really starting to pick up in general. And so a lot of them have come. I think on average there was a lot more people with basically less money in the earlier 1900 range, like 1940, 1950, 1960. And so our previous generation went through that. And so it's not even necessarily a fear of failure, but what they instilled in us was like, do these things and really focus on having something stable. Because back then, totally. I don't think necessarily being in business was as glamorous as it can be today. Mm-hmm. And so a lot of them said, okay, remove the risk. Because look, I know what it's like. I grew up on a point where 8 of us lived in a 2-bedroom house, mm-hmm. and we only had this much money. So now go and do these things. And they put a lot of pressure on this generation to get something very fixed and stabilized. Like everyone I know is like, yeah, I did this in university kind of because my parents pushed me to do it. And if you listen to them and why their parents did it, was because their parents didn't necessarily do it at the time, mm-hmm. and they had a lot of hardship in getting to where they are today. And to try and alleviate that, they want you to do something very stabilized and risk adverse.
No, that's a good point. I mean, they were sold this idea of, if you can just get your kid through university, they're going to be okay. And increasingly now, we're finding that's not necessarily the case.
No.
And there's been a push against that. There's a lot of great things that you can do without a university degree. But with respect to procrastination, like, do you struggle with procrastination? Like, how do you overcome it? What are your methods to it? Or have you never struggled with that? I know I have.
No, I definitely have. I'm the master of procrastination. Like I was saying before, is I've got books full of a million business ideas that I've wanted to start, and I've never kind of gotten to them. And so there's always been kind of that issue with me. And I still to this day wish a lot of these things I do now, I wish I had started them earlier. So I think for me getting through it, a big one honestly was university. As funny as it sounds, university kind of forced me to step up to the plate because you can't procrastinate in university. I did engineering, and they were especially hard on you. Like it wasn't like if I procrastinated and I waited till the last day, unfortunately, due to the size of the midterm or the assignment, I couldn't accomplish it. Mm-hmm. And so it forced me to learn that I have to just get things done when I get them.
Yeah.
And so that kind of carried through into my business sense. And my ability to do business and all those things didn't really grow until I got to that point. Now I'm realizing, now it's basically out of necessity that my procrastination has been kind of alleviated, because like if you don't do it, you're screwed. Like we can't not show up on closing day and at least even have something in the works.
Yeah.
Because you'll just get sued. You'll get absolutely destroyed.
Yeah, that's why these deadlines, I mean, we joke about them, but there's nothing better than a deadline, to get you motivated. I still need those deadlines. I think that's human nature because, again, And this, whenever I am struggling with something, I always try to figure, like, why does my brain do this to myself? Like, why does my brain make me want to, sit here as opposed to doing what I know needs to be done? And it comes back to that psychology deep embedded into our, synapses to fear an uncomfortable situation. And it used to be like fearing a saber-toothed tiger, but now it's just like fearing something that you don't want to do, something that is not immediately pleasurable in the moment. We are trained to prefer and have genuine, better reactions physically and mentally and all this in our body to things that are comfortable as opposed to things that are not comfortable. But we all know that when we step out of our comfort, just as we said before at the start of this, we know that's where we're at our best. We know that's how we grow. And yet our brain tries to undercut us and sort of sabotage us. And for me, I like being able to understand that about my brain, because then I'm like, okay, now I just need to kind of like reprogram my brain a little bit, or get a couple little habits together, because I'm big on like habits and habit stacking, to slowly start changing my brain, positive reinforcement or any of these things. And I wish I knew the author here. Tanner's going to throw something up over the screen, hopefully. It was called, I love books. We got to do. If you guys, anyone out there like knows any good books that you really recommend, fire them in. I'd love to read them. This one's called The Procrastination Equation, I believe. You check it out. You'll track it down. But there's this great equation that they set up for you're measuring your motivation, and it's essentially positively related to your expectation and how you value something, and then it's undercut by your own impulsivity and any delay. So effectively, the equation is that your expectancy and your value you put on something are your numerator, and then your denominator are your impulsiveness and the delay. All that means is if you expect something to go poorly, then you avoid it, obviously, right? But if you expect something to go well,
but it has no value,
but it has value, like you have to feel like confident in the outcome and then have a high value placed on it. And the value is just like your why. Why do you want to do this?
That's self-defined.
Your expectancy is what we talked about before, risk. So when you're looking at your risk, you have to build your information base and pump up your own confidence. Make your plan, build the right habits, set your goal. So boom, your expectancy goes up. And then the value, why am I doing this? What are the outcomes I'm hoping to achieve from this? Whether it's improve my own life, whether it's have things that my parents didn't have, whether it's provide for the people around me, whether it's just to make the world a better place, whatever that is, you need to focus on your why and build that. So your expectancy times your value, that's bringing up your numerator. And then your denominator, your things that undercut you, your impulsiveness, which would be things like, my natural inclination is to not act, right? I'd rather sit on the couch than go study. I would rather go out for drinks than to work on that side project. I'd rather go to brunch than go to the gym. Yeah. You need to kind of reduce that down and channel that towards positive things. And then the last problem is time. And so you need to start putting these deadlines on yourself to shorten the delay to action. And it'll be easier to see when we've got the visual of this equation up there. But effectively, if you raise your expectancy of success, you raise your value as to why you're doing it, you lower your inclination towards laziness, basically, and you shorten your timelines to give yourself goals, boom, your motivation goes through the roof. It's really cool for people who are into that. It's maybe a little preachy, but check it out. It's awesome.
Yeah,
yes, Neal.
1,000% on the delay one. I think that's one of the hugest values in there that makes a big difference. Yeah. Delay is so important. Like Shia LaBeouf, just do it. Like that is.
I don't get the reference, but I like it.
That is so important. Yeah. That you do, like, you need to just go. They say if you wait, if you're procrastinating with the idea, and the longer it takes for you to get started and possibly doing it, the likelihood goes down like so much exponentially. And that's what this is happening here. It's in the denominator of this fraction.
Yeah.
If you wait, like if you have an idea and then you kind of stew on it and kind of drag on and on and on for 6 months, 12 months, it's not going to happen. It's just not going to happen. If you have the idea, you want to make it happen, jump in head first. Again, there's a chance you're going to fail. There's actually honestly a high chance you're going to fail. But the only way you're going to find out and you're going to keep the momentum and gain any actual traction and actual momentum is by doing it right off the hop.
Also, and like all these things are related because, if you change your how you perceive failure, right? We talk about this all your little business. You're like, oh, and this one failed, and this one failed. It's like, no, like they were growing you to become the type of person who starts businesses, raises systems, and tries stuff, and that's why you're successful now. So you have to change your perception of the obstacle, change your perception of the failure so that it's not a negative thing. And then when we talk about goal setting, we're really important to say you've got to put a timeline on these things. So this idea of like, oh, I'm going to be rich by such a time or whatever, you need to put in systems that are a little bit shorter and set shorter term specific goals. Like this stuff is all super connected because then, you view risk in a different way.
The other two things that I'm going to add on to your fraction that goes on, I think, on the motivation equation is this is a hard one to be like, kind of make tangible, but making yourself busy allows you to do more, which I know sounds obvious and kind of stupid.
Yeah.
But my concept is you don't necessarily need to be busy doing what's exactly related to that. Like even if you're busy by going to the gym or doing your favorite hobby, like whatever, cooking a meal, like just filling in your time, then you're going to be like, okay, I only have 2 hours here. I'm just going to do this. But if you get up on a Saturday and you're like, I have nothing on the books besides potentially looking at this side project I want to do, I'll tell you right now, you're not going to get involved in your side project.
No, it's
but
true.
If you got 5 things to do and you're like, I got 2 to 4, that 2 to 4, you're going to be focused and you're going to work on your side project. And again, you don't have to get busy with things that you don't find enjoyable. Get busy with stuff that you love to do. Go for a hike in the morning, go out for a lunch. Like, all those things are fine. But it's creating like that idea that you're in this kind of routine, and it's tailoring into that slowly. You don't expect to go from having weekends off and not really running that kind of schedule to now, okay, I get up at 6 on Saturday and I go till midnight, right? So just tailoring into that and then staying busy. I find like when the real estate, like as being a real estate agent, when that slows down a little bit, I find all my stuff slows down because I just kind of drag on, even though I have more time.
And your energy comes down.
My energy comes down big time. My energy comes down quite a bit. The second thing to add on there that I think is to consider, and I think you kind of mentioned it, is the feeling that you get from accomplishing the tasks that you don't want to do.
Yeah.
Like, that's what I always need to remind myself. Like, there's a lot of things that I'm sure you find too that you don't want to deal with, whether it's like, okay, the bank wants me to put together another whatever, pro forma, and I'm not interested in doing so. So it just kind of sits there and I push it off for a couple of days and the broker's like, yo, where's pro forma? I need this.
Yeah.
I'm always like, oh, shit. And then when I finally do it, and I pass it in, I'm like, feels kind of nice. Like when I click send, I'm like, this is a great feeling. And I'm like, sweet. I'm going to like celebrate with a little something, my little chocolate protein shake, and watch a little YouTube video or something, right?
Yeah, and a lot of what we're talking about here does relate back to habits and things like that. But I'm going to share a couple things that a mentor of mine told me, and I love them both. One of them is he says that the key to success is doing what you don't want to do when you don't want to do it at the highest possible level. Yeah. That is the key to success.
Yeah.
Doing what you don't want to do when you don't want to do it at the highest level.
Yeah.
That's what makes you successful. But the other thing he said is everyone's excuse for procrastinating, especially if it's something that they know could be good, right? It's one thing if it's something that's going to be bad. I can understand wanting to put that off. But if it's something that's going to be kind of like has a good potential outcome, well, why'd you procrastinate? They say, well, I'm just waiting to be in the right mood. I need to be in the right mood.
Yeah.
And what he said to me is that the mood never precedes the action, or rarely precedes the action.
Yeah.
The action has to precede the mood. The mood will come after the action. Yeah. One example is, when you don't feel like going to the gym and you go and you get a pump on or whatever, and then, you actually kind of get into it. But the one that he shared to me, which I enjoyed even more, and this is his example. It's like, when you're with your significant other or your partner, right? And you're maybe not quite in the mood, right? Mm-hmm. But then sometimes someone initiates an action. And then all of a sudden, you're in the mood.
You're in the mood.
Right?
Yeah.
So next time you have something that you think you need to do or want to do, but you're saying, I'm going to wait till I'm in the mood, remember that the mood does not precede the action. It's the other way around. The action
Try
has
this
to
with
set
your
the mood.
partner and let us know how it goes.
But it's true. It's true for some of these things. Like I used to do it with when I was calling lead sources that I didn't want to call necessarily.
Yeah.
Right? And I was like, I got to wait till I'm in the right mood. I got to set up. I got to, and I've done this sometimes with sellers of properties, and then later the property sells. I'm like, oh my God, I just didn't take 2 seconds because I wasn't in the mood.
Yeah.
But then, boom, you make the call goes well. You're like, bring another one on.
Then you want to hit everybody.
Right?
Yeah, you're in that zone. Yeah.
Yeah, but it's the same like you were talking about when you accomplish one little task. This is why successful people are like, make your bed in the morning, because that reminds you that you're the type of person who cares about presentation, that cares about their space, and that gets things done.
Yeah.
And you start with making your bed, and then you stack on top of that, I'm going to make a shake for myself. And, so
Yep.
and you stack these things. And so making something maybe you don't want to do, sliding it in there in the framework or in the scheduling of a very successful day,
Yeah.
increases your likelihood of getting it done.
And you know what? This is a bit of a snowball effect. Once you kind of get the ball rolling, it gets easier and it gets better.
Yeah.
Because then
Oh, yeah.
things start to get gratifying. You start to
Yep.
achieve the things that you wanted to do.
Then you are in the mood.
Then you're always
Right?
in the mood because
Yeah.
you're in that world now. You've created that environment for yourself that you're enjoying it. To tie this back a little bit on procrastination, I think on real estate, this is something I think you've mentioned a few times, but paralysis by analysis.
Oh, yeah.
This, I think, is
Yeah.
very common for a lot of our investors, and
Yeah.
they've had to put it to the wayside. I think it was more common a few years ago because the market was soft, and so you didn't necessarily have to act in a day. And so some of them, but a lot of those investors I find now are struggling to acquire property
Yeah.
because I'm like, well, they listed it today, and they decide they're going to take offers tonight, and they're just like, well, I didn't get time to run my numbers. And
Yeah,
I'm
or they're like, well, I passed on a property 5 years ago because blah, 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 blah. I'm like, yeah, and you shouldn't have done that then, and now you're
Shouldn't be doing
doubly
the same
screwed
thing.
now. Yeah. Yeah.
So something to consider, like two things. I mean, there's conditions in these properties for a reason, right?
Yeah.
Like, so if you do a financing clause and your financing's not coming together, it comes at 65%. Like, you can back out. It's not necessarily, you know what I mean? Like, they can't expect you to come out with an extra 10% if you don't have the cash. And it's to be expected that you can do a 75. And then additionally, you need to be able to kind of operate on a fast scale if you want to be doing this kind of thing. And sometimes going so heavily, like I know a lot of my clients want like every little detail. They want to see all the leases, all the little everything. And I'm like, honestly, if it gets down to the point where the details are that minute is going to make or break this deal, you probably shouldn't be in it anyways.
Yeah.
Right?
Yeah,
Like,
yeah, that's
like
true.
if you're buying a 12 unit
Yeah.
and one lease's term is going to be the issue,
Yeah, then you're in trouble.
like
regardless.
you shouldn't be buying this thing to begin with.
Yeah, yeah.
So
Which is why, again, when sometimes people ask me this, and you've probably had these people that over and over like, "Hey, man, I think I'm going to buy something, man. I'm going to do it." It's like, man, like you've been saying this for 5 years,
yeah,
right? And that tells me you may be dissatisfied with some elements of your life,
Yeah.
but you're content enough that you're not going to act,
yeah,
right? So I think we should do an episode sometime where we bring on some psychology person or something that talks about how our brain messes with us and kind of stifles us when we're trying to grow. But
Yeah.
I think if we were to kind of summarize, this episode, it would be one, to embrace the idea of struggle and to celebrate the idea of failure so that you can then see it in a different light as opportunistic or just even, making you better in some way, shape, or form. And then maybe how to look at risk is, again, to understand your brain and why your brain has evolved to avoid risk, but then how you can understand that, switch it around, and use it to empower you and conquer things like procrastination and to do things like build good habits and set good goals.
100% to what you said. Do one thing again, and just do it progressionally. Like, again, nothing has to happen overnight. You're not going to
Nope.
switch into this.
Yeah.
Understand that this is a journey. It takes years, like easily takes years, to become proficient at it and to be comfortable with it. Like, but do it in steps, and it's not going to be ultra rewarding to begin with.
Yep.
So you establish those small rewards for yourself, and eventually you'll get to a point where you're actually going to really start to feel it. But just, I think that's like a big one I find with a lot of people in this generation today is, it's like, well, I did this for 6 months, and where the heck's my...
Oh, and full disclosure,
Like
man,
what?
I'm not by any stretch
I'm not, yeah.
saying I've got this under control. Like, you are not going to reprogram your DNA, right?
Yeah.
Like, you're not going to reprogram how your brain works. So this is a constant... This is why I come back to some of these texts and these ideas, and this is why I even like talking to other people about it, because it reminds me, and it's been really helpful to me of late when we talked about the goal setting, where this idea it makes you actually kinder to yourself when you understand this, and you kind of just work to be a little bit better every day.
Yeah,
Sorry, I
'cause-
didn't get your obscure
obscure-
Shia LaBeouf reference.
I don't think it's that obscure. If some people could comment and let me know if they
Yeah,
think it's obscure,
yeah, this is gonna be a
that would
generational
be
thing.
amazing. I think.
None of you got like I dropped
Where's the video?
Mason Puffy
We need the video.
reference like broken glass everywhere. If anything about the money puppet, just don't care. And you guys didn't even notice what I was talking about. No, still don't get it. Japers, kids these days, man.
Kids are broken. Here it is. Volume up.
What's he going? What's he doing?
Do it! Just do it!
We have this audio. This audio is playing over
Live
this.
your dreams.
Okay.
be dreams.
There we go.
Yesterday, you said tomorrow. So just do it! Make your dreams come
Is this
true!
meant to be ironic
Just
or real?
do it!
I love that it's on a green screen. You can put this over anything.
While you're gonna wake up and work hard at it. Nothing is impossible.
It's been put over literally everything.
Do you play this like for yourself on loop every morning?
This is my alarm. This is my alarm
You're
in the
not
morning.
gonna stop there. No, what are you waiting for?
Okay.
I also have a giant hand that comes out and smacks me
Slaps
under my
you in the
bed,
face.
and
Right
then he just starts screaming at me.
Get motivated, stupid.
Yeah.
All right, so I think that's kind of our time for today, unless you have any parting thoughts.
No.
I love talking about this stuff, man. I know some people probably sign up for real estate or just like angry ranting, but I just find this stuff so interesting.
Yeah. No. I
think
got
it's
an
part of being
emergency plumbing repair to go to.
Oh, mamma mia.
But
Never ends.
Yeah.
All right.
So
Well, thanks, guys. Check you
Check
out
it out.
next time.
thanks for listening. Subscribe, comment, like.
Yes, smash the like button.
Thanks, guys.
When I was broke, I had rich habits. When I was broke, I had rich habits.